The government has indeed tabled its midterm economic survey in Parliament. Remember, this is the second edition coming in from this table. CPI inflation by March is likely to be below 4%, is the big word that's coming in from the survey, which is much in line with what the RBI has been reiterating. The government's stance on this, of course, has been that that limit could be overshot on the downside. Let's take this across to a power pack panel that we have right here on ET now. We've got our very own consulting editor, Maithili Busnurmat, consulting editor, Swaminathan Iyer. We've got Mr. N.R. Bhanumurthy, Shamika Ravi and Ashok Lahiri joining us right here. Maithili, to you then, your quick take first on the government's own assessment of the economy. Much in line?
Yes, very much so. At least as far as inflation is concerned, certainly in line with what the RBI said earlier. As far as growth is concerned, they've given a wide margin. Because the RBI, remember, has said 7.3, having brought it down from the earlier estimate of 7.4. So this is a very wide range. At the lower end of the range suggests that the government is not as optimistic even as the RBI. So possibly we could see growth slipping to below 7%, and that would be quite disappointing for the government, I must say.
Okay, let's take this across to Ashok Lahiri, who's joining us also right here on ET now. And thanks very much, sir, for being with us. I do want to begin by talking to you about what the survey has said on the macroeconomy. Inflation likely to be at levels of 4%, but it does raise suspicion that growth could trade anywhere between 6.5% to 7.5%. And it has raised a red flag on fiscal discipline as well. It says fiscal outlook is uncertain for fiscal year 2018. Deflationary pressures are setting into the Indian economy. Your quick take before we begin discussing each one of them individually.
So I'm quite happy about the fact that inflation, the target that had been set, 4% plus minus 2%, we are fairly on target. That's a good news. 6.5 to 7, that's not good news, but you must remember that the Indian economy was on steroids when the Great Recession set in. And recovering from the steroids, when you had fiscal expansion at an unprecedented rate, that will make, and we're not surprised, that will make fiscal consolidation a difficult job, as well as recovering growth. So I'm not very worried about 6.5, 7. The question is that this economic survey, which is for the first time you have this economic survey format, this is supposed to tell you something about what should be done. What are the possibilities?
Okay, Maithili, I'm going to take this to you then. The question has to be about scope of a rate cut. And, you know, Arvind Subramanian has been very vocal in his criticism of the RBI, the 25 basis points also which came. I'm given to understand North Block wasn't impressed at all. But we're seeing a fresh new frontier open here because they have categorically put it that scope for monetary easing is considerable, not limited, not uncertain, but considerable. So they expect more monetary easing to happen. In fact, I think one of the flashes that I also did see, repo rate is currently 25 to 75 basis points above neutral rate. So there is a lot of criticism as far as monetary policy is concerned. Let's address one elephant in the room after the other. So let's address monetary policy and the stance of the government on that.
Well, yes, this has been a pet peeve of Arvind Subramanian. In fact, it's not the first time. I think for the past 1 year, almost after every monetary policy statement, he has come out, you know, sometimes not very politically correctly also perhaps, because remember, monetary policy is purely, or it's supposed to be purely, the domain of the central bank. Typically, governments and finance ministries steer clear of commenting on interest rates. So this is something that Arvind Subramanian has really basically crossed that so-called Lakshman Rekha, but he's made no bones about the fact that he's unhappy with the stance of monetary policy. He thinks the repo rate should be cut further. So I think this is not anything new. But the question that I think one remains to be asked is that even if we did cut interest rates, is it really going to set private investment, you know, ticking once again? And that really is the big issue, because interest is only one factor that corporates perhaps take into their consideration. There are a whole lot of other issues which also need to be addressed. So even if you were to reduce interest rates more, of course there is the argument that the RBI should have reduced interest rates more substantially in the latest policy, maybe by 50 basis points. But the unanswered question is, what will this achieve? So that, I think, is something that has not yet been addressed. I don't know whether the economic survey addresses that. Of course, it's only been 4 months into the new fiscal, so the economic survey perhaps cannot really comment very much on what is past. But I would like to know whether the survey comments on demonetization, impact of GST. These are two major events that hit the Indian economy, and I'd like to know what the survey thinks of the impact of those on the growth.
Swami, the big picture, and the big picture from the survey seems to suggest that things are looking up as far as inflation are concerned. Inflation is likely to be at levels of 4%, but there are clouds of uncertainty around growth and on fiscal discipline. Growth likely to be between 6.75 to 7.5%, and fiscal discipline, fiscal outlook looks uncertain for this year according to the survey. Are those two things that worry you?
I will simply say it's an optimistic survey, but the assumption is that we've had some temporary disruption because of demonetization and GST, but it's all going to come right. We are, after the initial disruption, there is going to now be a great revival, a substantial revival of revenue. The economy will look up. Will that actually happen? I think there's a good chance of it happening, but it's not certain. I think we may have underestimated the amount of disruption that's taken place. Secondly, I am disturbed, frankly, by can we really have such a high growth rate when exports continue to be languishing? We've got a very strong exchange rate, getting stronger and stronger. I would really worry. I would say that if only we had a much more competitive exchange rate, that would then spur our exports, and without buoyant exports, to be sustaining such a high rate of exports would be difficult. However, I appreciate the attempt that the subsidies picture is going to improve with the fuel subsidies coming in, offsetting the rise in any kind of thing in the food subsidy. I do see that there is some improvement in capex, which looks a good thing. The one thing that worries me is that there appears to be hardly any additional provision for the capital infusion into the banks. I would have thought there is probably a need for a very major new infusion into the banks, and that hasn't happened. So overall, I would say yes, it's a somewhat optimistic survey. I think many of the predictions made, they could come right, but the government will require a little luck for all that to come right.
Shamika Ravi will welcome you on ET Now, and will also throw that question to you. This is an optimistic survey, says Swaminathan Iyer. Do you essentially agree with that view? 4% level of inflation by the end of this year, and that's largely in line with what the RBI is also expecting. But growth levels of 6.75 to 7.5%. And this survey, Maithri, you were talking about demonetization, does talk about demo and says that demonetization effect on tax mop-up to manifest gradually, and demonetization may continue to pay dividends over time. I'm presuming they're not referring to the RBI dividend, but dividend to the economy as a whole. But Shamika Ravi, if I may ask you the question, the big picture question, how worried are you about 6.75 to 7.5% growth? Because the debate then is that are we looking at growth levels of sub 7% as well? Or do you believe this survey in any case is too optimistic to even talk about levels of 6.75 to 7.5% given the disruption that one has seen in the Indian economy?
Well, frankly, given that range, it is not all that unrealistic. Given that we really haven't seen a contraction of the kind that were feared after some of the disruptions. But frankly, the great digitization efforts that we have seen post demonetization, the pickup in the infrastructure spending, there is reason to believe that if things continue, and barring the export concerns that Swami put, it is not unachievable. These are numbers which are not completely unrealistic. So I do think that the economic survey might get it right. One thing that I think requires further emphasis is the government came with a large pitch on rationalizing a lot of these subsidy schemes. And in that sense, which means, better, more efficient utilization of some of these government funds. We haven't really heard very much about beyond, we keep hearing about the JAM, we keep hearing about connecting some of these, moving more towards direct cash transfers and so on. But, it's about time we went from the pilot phase to something more mainstream. And towards that, while the economic survey in part 1 alluded to that, but the details will be required. And I think, I hope part 2 does give us some details of that.
Okay, so I will quickly address subsidies, and Mr. Bhanumurthy, if I may actually begin with you. It very categorically says, at least on the farm piece, that there is a need to shift to direct subsidy from MSP for most crops. There need to be crop neutral subsidies for addressing the farm distress. And it also says that needs to end stock limits as far as crops go and as far as stock limits go. Is this perhaps politically palatable? Is this going to be politically pragmatic, or is this something that you put in the survey to start a public debate which never really gets anywhere? Or do you believe this government will have the gumption, because they're talking about rationalizing subsidies, to look at something like this?
Well, I think rationalization of subsidies is definitely on the government agenda. And if you have seen for the past couple of years how these fuel subsidies have been really rationalized, and at the same time the use of technology or the way the subsidies have been routed through the direct benefit transfer and all those things, certainly says that government is very serious about rationalization of subsidy. But one thing we need to be very careful here. Subsidy per se is not a bad word. I think it's very important. Particularly, that's one major counter-cyclical measure that we have. So, given that, the more important part is that how we can reduce leakages in the subsidies distribution. I think that's a major thing that I take it. But I think the Chief Economic Advisor is also talking about universal basic income. So we need to discuss this issue together. I think subsidy as well as the universal basic income, I think that needs to be debated, and I think the issue is still open in my view.
Dr. Larry, I'm going to come to you, and this is about banks really, and banks have been such a talking point as far as India's economy and that discourse is concerned. Three quick pointers on that. Private banks, loan growth more robust than that of PSU banks, which isn't anything new that the survey is telling us. PSU banks are limiting damage rather than seeking new clients. So that's a scathing observation. And inadequate demand can't fully explain the credit slowdown. Inadequate demand, in fact, so these are the comments on banks, and banks have been such a talking point. The whole NPA resolution, are banks adequately capitalized, the point that Swami was making. I want to quickly ask you, what do you make of the points that have been made on banks in this survey?
It's well known that the public sector banks have not fared as well or have done worse than the private sector banks. And we shouldn't be surprised by that, because public sector banks are saddled with multiple objectives. On the one hand, you are told that the public sector management is told that you must make profit, but you're also told that you must help the poor, you must give loans to the priority sector, you must make sure that the economy is prospering. All these arguments are given. Now, I think one clear solution that has come up is, do we need so many public sector banks? I don't see why it shouldn't be possible to offload some of these public sector banks. But even if you do that, the question is, if they have a balance sheet problem, where is the money going to come from? Are you going to sell them at a cheap price? Because if they have a liability problem, then you're not going to get a good price. Or are you going to capitalize them before selling them? Now, I don't know what the economic survey has said. It's easier said than done, and there is a political problem. So public sector banks, that is a major problem in India, because they occupy the bulk of the space in the credit market and the deposit market, and we need to resolve that.
I'm going to shift focus and talk about the farm loan waivers, because the survey has spoken a lot about this. And in fact, according to the survey, and Shamika Ravi, this is coming your way, 2.7 lakh crore worth of farm loan waivers is what India will end up seeing by the end of this entire exercise. The survey is very categorically raising a red flag on how this is going to spread on state government's bonds by about 60 basis points. And this is happening at a time when state finances are deteriorating. I'm quoting exactly from the survey right here. Are you as worried? And the survey's overall assessment is that farm loan waivers across states will impact India's GDP growth by about 0.7%.
Overall, I am concerned as an economist, because it portends, lots of negatives if this kind of populist measures are become part of mainstream political electoral politics. We have seen this in the past. Now this also links back to the public sector banks discussion we were having. Now public sector banks, we talk of them as if they are all the same. It is a large bucket, but there is a distribution if you look at the public sector banks and their performances as well. And there are some public sector banks which have serious governance problems, and that need to be hauled, that need to be, need to possibly get consolidated with some other banks, but those possibilities should be publicly discussed, and the merits of that kind of a move has to be openly put out, rather than saying that they have multiple objectives, so let them perform however badly, because they are like a holy cow in the economic discussions. Similarly, for the farm loan waivers, I mean, we have seen in the past that sometimes it's a good tool to have. It's a good instrument because collectively we do not have the kind of insurance mechanisms. The farming community is susceptible to weather conditions and lots of uncertainties. So sometimes this is a good instrument to use, but increasingly it is becoming more of a part of electoral politics, and that then there is a one-upmanship, and then it's a race to the bottom if you look at parties really competing to give out these kind of freebies, and that really is going to hurt the credit culture and the discipline which takes generations to build in any economy, and particularly in economies which are essentially informal, where there's a flexibility in terms of repayment and how you repay. When you move towards formal banking, which is what these loan waivers are meant to target, financial discipline is very important, and to treat it so lightly is a real problem.
Swami, I want you to come in on that, because this is so much about political economy that we talk about, and Shamika is right. There is always this one-upmanship. If UP has done this, then Maharashtra wants to follow suit, and so will another state. But the survey believes that the farm loan waivers could actually amount to about 2.7 lakh crore rupees this fiscal, and could hurt India's economic demand GDP by about 0.7%.
Yes, I mean, when you have an official document looking forward, it may not get into the politics of it. But what has happened because of the UP farm loan waiver, it's spreading like an epidemic. I would not be surprised if this becomes something that is politically inescapable even for the coming general election in 2019. You might find that they say that every state that has not got a farm loan waiver, let us give it to them also. Otherwise, the opposition will be coming forward to it. I mean, so this, the farm loan waiver shows one of the dangers inherent. One party puts some things forward, everybody else says that we are going to do the same, everybody follows the route. And there is a danger of this happening again and again and again. The Gujarat state election coming up, and most people believe that by the time that comes, there will be a loan waiver for Gujarat as well. So this remains a danger. The other populist thing that people are not mentioning, there is a bill which has been put into Parliament on creating a new minimum wage, a universal minimum wage for the whole country. I have no idea where this particular minimum wage is going to be fixed and how it's going to be implemented. But it does contain huge populist dangers. At the time of a coming election, can you see competition between political parties? I am going to make the minimum wage so much, I am going to make it so much, I am going to make it so much. So this is, I mean, for a government which says that we are going to have minimum government, to me this bill for a minimum wage is an extremely dangerous populist new thing, and it may now come up before the next election. It may come up in the next year, it may come up the next 1.5 years. And I think that then becomes a major populist danger which affects the entire rate of growth, and then affects all your revenue projections, all your tax projections, all the rosy projections of what's going to happen. So populism remains a very considerable danger. It has not gone away, despite the fact that the Modi government has a substantial majority at the center and is winning in most states. Nevertheless, the danger is there.
Indeed, in fact, a lot of experts out there also point out that in the first 3 years, the course of Modi government's rationale and its at least economic ideology did change. From free market, it became more left of the center, more populist. But Maitri, you wanted to add on to the point about the minimum wage bill that's in Parliament?
Thing is, even though we have a minimum wage bill now in Parliament, the fact is that almost every state already has minimum wages. And this is the hypocrisy or beauty, quote unquote, of India, that you can have any number of laws on paper, but nobody bothers about the implementation or about the enforcement. Right to education is now a fundamental right. But how many kids are out of school? Are we able to enforce and ensure that every child is in school and schools of a certain minimum quality? Not at all. So the government does these things, and populism is part of, I think, electoral politics, particularly in a poor country where it's so easy to hoodwink the people. But the good thing is that the electoral the population really is smarter than what many people would believe, which is why I think they have thrown out governments that have not performed and voted in governments that have performed. So I wouldn't worry too much about minimum wages. Everybody knows it's just a sham. The government feels the need to do it and they'll do it, but nobody takes it very seriously.
So I'm now going to turn focus and spend some time about the debate that is out in the public domain. So one is on the RBI and the other is on the impact of demonetization. But let's begin with monetary policy. And Dr. Ashok Lahiri, I'm going to begin with you because it is very categorically said here that there is a considerable scope and elbow room for easy monetary policy. Arvind Subramanian has had that stance for long and he's not shying away from making it public even in his survey. But my larger point on this is that A, do you essentially agree with this? And I'm going to quickly point out some of the other things that the survey says on inflation and on monetary policy. The survey also says that repo rate is currently 25 to 75 basis points higher than neutral rates. Real policy interest rates are currently very high. Macroeconomic challenges to counter deflationary impulses exist. And it also goes on to say, though, that there isn't too much of a demand to push up inflation in the near term. Economy lacks dynamism to push inflation towards 4%. So according to the survey, 4% is what we will have by March. It will peak in January, but then begin to wane off. So I know it's a long-winded question, but I'm really asking you, do you essentially agree with the survey's position on monetary policy? Should RBI perhaps look at an easy monetary regime than it has? Should it be more aggressive on rate cuts than it has been in the past?
I don't agree with that because one of the things which is easy for the Ministry of Finance to say is that the RBI should loosen up. And of course, it's easy for RBI to say that you should get your fiscal house in order. I think it would be a much better thing if Ministry of Finance looks after fiscal policy and RBI looks after monetary policy. Now let's first get at repo rate. Now, repo rate is basically the rate at which the RBI stands ready to lend to the banks. Are the banks really short of cash? If RBI comes and says we'll lend to you at an even cheaper rate, are they going to take the money and lend to the economy? I don't think so. Second, the issue has been brought up by Swami, and also I think Shankaracharya mentioned this. One of the things that is a bit worrying is the exchange rate movement. Now, if the exchange rate is moving and you want orderly conditions to prevail and the rupee not to appreciate so much, then the RBI has to buy dollars. When it buys dollars, it automatically releases money. Now, if it releases money, then it cannot release money in other ways. So you have to look at this trade-off between exchange rate policy and the repo rate or what it does to in terms of lending to domestic agencies, including the government. Third point is the RBI has set or has been given this 4% inflation target. The survey itself, without reading it, you're telling me that the survey is saying it's going to be 4%. What do we want? Do we want 4 plus minus 2? So the RBI should target 6% and then miss it? I don't think there is anything to suggest that we are going to have deflation in the coming months. I hope I'm not wrong, but I don't see any indications that we are going to see inflation falling far below 4%, leave alone 4 minus 2, that is 2%.
Fiscal outlook for 2018 looks uncertain according to the survey. And we have already seen what has happened yesterday, which is the dividend from the RBI is almost half of what it paid last year, much lower than the government's own budgeted for amount. So, one revenue stream in any case is compromised and there will be some impact of demonetization and of GST early on. Maybe the tax mop-up goes up, but I'm just trying to ask you, will that be enough for these revenue streams that are losing out?
I think there are definitely risks. I think the impact of demonetization and the impact of GST could continue for quite some time more. I've just come back from Uttar Pradesh and they were saying that till now, the entire meat buffalo trade, which got disrupted at demonetization, still has not recovered. And that entire cash business is still not functioning properly. So it is not, it is reasonable to hope that in the second half of this year, there will be a recovery. Whether it will fulfill all the revenue expectations, I don't know. And you may get a situation where once again there are some other problems. As you just said, the dividend of the RBI has gone down. I don't know what's going to happen to the proceeds from privatization. There is already an optimistic high target. If this Air India thing can be done and the ETFs of the public sector are done, I think you could achieve that particular target. So the disinvestment part, I think you can get. I think there is a real risk whether revenues this year, this financial year, will be as buoyant as you are hoping for, in which case Mr. Jaitley might well have to tighten his belt and cut down spending in the last few months of the year. I think if you look the year beyond, I think there is a good case for saying that if there has been this disruption of GST and the disruption of demonetization right now, once that is over, you can get a spurt and things can improve and get better in the year following, yes. But for this current year, there are definite risks on the growth and on the revenue side, dividends of the RBI, privatization. On all these, there are serious issues.
Fair point indeed. We are completely out of time here, but on that note, Dr. Ashok Lahiri, Shamika Ravi, Mr. Bhanumurthy, Swaminathan Iyer and Maitri Bushnurma, thank you very, very much for joining us in this edition.